Have you ever wondered how to buy a car with zero money out of pocket? Now, guys, it is not magic. You just need to know the actual steps and the process on how it works. Stick around because I'm about to break down how I built an entire fleet with no money out of my own pocket.
Welcome
Welcome
back
back
to
to
the
the channel. I'm your favorite businessman, CEO Rico, and I help individuals start and grow their businesses and scale it to six-figure businesses. If you are to learn how to actually build business credit and use it to grow your fleet, rental car fleet, Turo fleet, without actually touching your personal savings, you're in the right place. Let's get into it. So the very first thing that we need to discuss is the power of business credit. Now, first, let's talk about why business credit is actually a huge game changer. So, like, unlike personal credit, business credit allows you to separate your business expenses and your personal expenses. You never really want those co-mingling with each other, right? Now, what that really means is you can actually make larger purchases like vehicles, for your fleet specifically, without actually maxing out your personal credit or risking your personal assets in order to build it. So building business credit opens a lot of doors as far as better financing, low interest rates, low loans, and just lower business lines of credit in general. That way you can fund basically anything, but in this video specifically, you can fund your fleet with no money out of pocket. Now, here's one thing I want you guys to always remember: when you're out there getting business credit, you're building business credit, that particular credit stands alone separate from you unless you're putting a personal guarantee on the line. But without the actual personal guarantee, all of these things are strictly on the business. Now, yes, you do need to build the business up, of course, but it stands alone, completely separate to you. And one of the greatest things about it is you get access to larger lines of credit. When I mean large, I mean significantly larger. So, number two, how I actually built my business credit. So, with building business credit, so it's a process that it's not hard as people think. And I'm just giving you a few other different things that I actually did to actually build it, right? So, first, I registered my business the proper way. So, I started with, of course, whether you go on LLC, S Corp, whichever route, talk to your tax attorney and accountant, whichever to see whichever is beneficial for you. Once you do that, you go in and you get your EIN. You get your EIN from the IRS. Now, if you guys need any type of help with this entire process, hit the link below and you can either set up a consultation with me and we can actually go over my services to help you with that, or you can actually go to my build a business course and you can go step by step on how to do the whole thing. I literally walk you through the entire process. Now, once you get those two things set up, what you got to understand is the LLC or the S corp. The main purposes for those are to give you protection. It protects you from the business. So let's hypothetically say, just real quick, let's say you get into a situation where, let's say you were personally liable, you put your social security number on the line to purchase an asset. That asset is tied to you directly. If anything was to happen in regards to somebody getting injured or anything like that, and somebody were to sue the business or whatever that asset is that's generating the income, they're coming after you for everything you have personally because you did not create a separation between the two. All you did was you just started a business, but you have no separation, which means everything that you have is 100% on the line. So, guys, you never want to do that. Now, of course, after we get the EIN, that establishes the business that has an identity. Just like your social security number is your unique identifier that identifies specifically to you, that's the same thing what your EIN is for your business. So after that, you open up a bank account. Now, there is a few documents that you will need. You will need your articles of organization. You will need, of course, a license. And I believe that should be the main two pieces of documents that you actually need to open up a business bank account. Once you get that situated, now we can move over to the next step, which is, establish your vendor accounts. Now, with your vendor accounts, these are typically your net 30s. Typically within the net 30s, you get your companies like your vendor accounts like Uline, Granger, and there's a few other ones because it's different stages to this entire process. But once you establish those, you go out there, you purchase, a small amount, typically like $50 worth, and you wait until they send you the invoice. You do not pay with cash up front. You use the invoice. You use the invoice method. And then once you actually get that invoice, that's when you actually go in and you pay it. Because what that does is it triggers the payment terms being a net 30, and then they'll report that to your the business credit bureaus in a sense. So now the next step is, of course, to get a business credit card. Now here's the thing with the business credit cards. About 99% of the time, you know what, I'm telling you, like 95% of the time, you're going to have to personally guarantee the business credit cards. Now, I know that a lot of people say, you can get them without personal guarantee. The very few companies that offered that, one of them being Sam's Club has started to pivot away from that and enforcing individuals to use a personal guarantee. Now, this is not 100% across the board, because some people have still been able to get the business application where they don't have to put their personal guarantee on the line. But as of right now, it seems like it's a case by case situation. But you go ahead and get your business credit card. Honestly, guys, if you need to put your personal credit on the line, I would do it with no issues, especially if you have good personal credit, because at the end of the day, this is your business. If you're running a legitimate business, you actually want to see it succeed. So it's like, why not? Now, how I use it to actually buy cars. So, really quick backstory. I started with a 2015 Chevy Cruze as I started to build my fleet. With this vehicle, I was like, you know what? I want to put this vehicle on Turo. I've been I've been building my business credit. Let me go out and see if I can actually use my business credit to get me a vehicle. I literally started my business March 20th of 2020. So literally I built up my business credit for a year, went to the Ford dealership. That's when I got my 2020 Ford Fusion that had literally 69 miles on it. Got that vehicle. Now, for this particular vehicle, I did put a personal guarantee on there, but that was only because in my mind, I knew once I put this personal guarantee on here and I get this vehicle, I'll never have to do a PG again. And that's exactly what happened. So all the vehicles after that, no PG whatsoever. So, yep. So finance it through a dealership. That's definitely one of your options. You also can go to like banks and get like business auto loans. That's an option for you as well. If you leverage that, typically they should have lower interest rates for you and flexible terms because you're dealing directly with the bank. And what this does is it doesn't affect your personal uh, credit score. Now, if the banks are at requiring you to put a personal guarantee in order for them to push the loan through, that's something that you need to be mindful of. And, of course, assess it at that time. If it's something that you're willing to do, by all means, go do it. If it's something that you're not willing to do, then of course don't do it. Now, the third step was leveraging lines of credit. Now I'm gonna tell you guys, typically, especially within this business, using a line of credit that has a very low interest rate, and especially if you have a large line, that will probably be the most beneficial as long as you know how to actually purchase the vehicles. If you go out there, you haven't done any market analysis, you haven't actually did any type of comparisons or anything like that, talk to anybody, seen, what was out there, and if you go buy a brand new vehicle, I'm telling you, 9 times out of 10, you are putting yourself in the worst situation possible, especially if you do not purchase that vehicle the right way. So, guys, do not leverage, your lines of credit or anything like that if you don't know what you're doing, because you're literally setting yourself up for failure. And I know some people can do the whole learn as they go. That's one way, but I'm telling you, it's not really worth it at the end of the day when it comes to this business. Now, here's a little bit of a snowball effect, right? So after successfully purchasing like my first vehicle with the business credit, of course you want to reinvest the profits into your rentals in order to pay down the loans faster. Now, some people choose not to do that. Some people choose to keep the profits or whatever. That's something that you can do, but like that taking the profits and reinvesting it boosts the business credit even more, which allows you to finance more cars. And the best part is, as the fleet grows, the income grows, which makes it a lot easier to scale without relying on, like, of course, your personal funds. And it's all about leveraging what you've built to grow bigger and faster, but having the increased profit margin and revenue, like streams. You can also go back to the financing table and request, you get something higher, because not only do you show that you have more revenue that's being generated, you have more profits that are generated, you also now have more experience, which typically with lenders, that makes them feel a lot more comfortable. The thing about when it comes to financing, you really want to make the lending institution extremely comfortable when it comes to doing business with you, because the more comfortable they are, the less that they see that you are of a risk, the more they'll be willing to give you. Remember, banks want to give money. That's how they make their money, but they don't want to just give it to anybody. So that's something you definitely need to remember. Now, as a bonus, I always give out bonuses, right? So many people overlook the importance of maintaining a good personal credit score or credit profile while building business credit. Now, while business credit can stand on its own, right? Having a strong personal credit profile can really be like used as a backup for securing the best financing terms. So always keep an eye on both, and you'll definitely be unstoppable. Now, here's the thing also. When you start building your business credit, you can do this with bad personal credit. It's just a little bit more challenging, because the type of credit and things like that, like, you won't be able to speed up the entire process. You won't be able to go to some lending institutions because they will require you to, you know, uh, put a personal guarantee on the line. However, whatever process that you do go through, I guarantee you, establishing business credit and getting those business lines and business loans and all like that will literally change your entire life, because you get access to so much more capital. Real quick example. If you had, let's say, a $20,000 credit card, right? And you made sure it never was maxed out, you didn't carry large balances over to the next month, you made all your on time payments, and your utilization was extremely low. When you go to apply for business credit, like business credit cards, typically what they do is they like to go 5 times the amount of your highest credit card. So if you got 20,000 and you showing that everything's good, payments good, you can potentially get $100,000 credit card in one shebang. Now, just to give you quick numbers on how I typically ran my business, if I have a $100,000 line of credit with a low APR, and let's say hypothetically it's 0% on the first, let's say, 18 months, because I know how to work on cars, because I know a lot about cars and how to operate and everything like that, if I'm going out to purchase vehicles, I'm going to source my vehicles for the cheapest way possible. Now, quick scenario. If I go out and I purchase, let's say, 5 vehicles for $5,000 each, right? I paid $25,000. So with those 5 cars, I'm expecting at least, let's just say, $1,000 profit a month. So that's 5,000 a month. I can literally pay back the $25,000 investment with, remember, 18 months, 0% APR. I can literally pay that back in 5 months. And then everything after that is all profit from those cars. So then if I'm still collecting the 5,000, I can set it aside, or I can literally take it every single month, go out and buy another vehicle, and then another vehicle. Now, I typically bought all my vehicles, they fluctuated, but my real money makers were the super cheap cars. So that's what I typically like to do. But just keep that in mind when you're looking at this business. Now, if you're actually ready to start building your business credit and purchasing cars for your fleet, hit the link below to get my 99 problems, but a Turo booking is in one step-by-step ebook that will give you all of the steps and the guidance on actually launching your Turo business. Once again, the link is in the description. And of course, if you got any questions about building a business credit or financing your fleet, make sure you drop the comment below, because I'd love to hear from you. And of course, give you a few pointers, help you out, a few tips here and there. All right, y'all. Once again, it's your favorite businessman, CEO Rico, and I'll catch y'all later.